Hey everybody, it's Rob Campbell, the mortgage broker from the Rob Campbell Mortgage Team. On this video, we're going to talk about the top 5 frequently asked questions for first-time home buyers. Here we go. So it's that time of year, it's the spring market. Although it's only February, the market is already starting to explode. And there is a lot of activities, a lot of offers going into multiple offer situations, a lot of properties selling within a day or two. Under competition and in competition. So here's the top 5 questions that I commonly get from first-time home buyers that might help you or somebody you know with buying their first home this spring. Here we go. What happens to my deposit? So with an offer that you write with your realtor, shout out to realtors out there. When you write an offer, you put a deposit down with your offer, and it's in a good faith that you put a deposit down with your offer when it's presented to the seller. The seller is going to review offers and base their decision on price, conditions that remain, but also maybe the deposit. So the deposit is something that you put down in good faith as a certified check with your offer to say to the seller, hey, we're really interested in buying your listing, but we have to do our due diligence with our financing or inspection or giving us enough time to close. And that deposit that you put down might be $5,000, it might be $10,000, it might be $50,000. I saw an offer once with a $100,000 deposit.
That's pretty crazy.
And the deposit is given with the offer to show validity of the offer, to say, hey, we want to buy your home, but we also got some money over here to show that we're serious. So to answer the question, what happens to the deposit? The deposit gets deducted from the remaining balance of the closing costs at the time of closing. So with your down payment as a first-time home buyer or any home buyer, you're going to have a down payment component of your offer, and that deposit can actually come away from that remaining down payment owed. So if you put a $20,000 deposit, but your down payment total is $50,000, then you're going to need to come up with the remaining $30,000 at the time of closing. The $20,000 is already taken from the deposit and the closing costs. So that is what happens with your deposit. It doesn't vanish, it doesn't go anywhere, but towards the closing costs and the down payment, and goes towards the down payment with your lawyer and the seller and you at the time of closing. So that's question number 1. Question number 2, what happens with the process and getting closer to closing, and how does this all work after we have our offer accepted? Well, your real estate agent / realtor, certified realtor, is going to help you with those steps, but here's generally what happens. You make an offer, the seller approves your offer or accepts your offer, and then you have, depending on what's in your offer, you have a financing condition or an inspection condition. Maybe there's some other conditions in there, but generally speaking, there's a financing and an inspection condition. This gives you a bit of a buffer to get your ducks in a row. So if you visited us already and we've gotten all of your paperwork and we've given you a pre-approval or pre-qualification on paper to say that we've reviewed your documents and everything looks good, we can get your approval in about a day. We can get your approval in about a day into our office and review those conditions with you to be able to close in a timely manner. You also have to get an inspection. Now, I know this sounds crazy, but your Uncle Jimbo, who used to work at a lumber yard that knows kind of how to frame homes, is not an inspector. That sounds crazy. No disrespect to you if you actually have an Uncle Jimbo who used to work at a lumber yard. You need to pay the $400, about $400, to get a proper home inspection. Going into a place and like tapping on the walls to see if you can figure out if it's a good home or not ain't gonna cut it. You need to hire an inspector who's gonna be qualified to go through the home, give you a full report and document everything that's great with the home and everything that's not so great with the home. The reason you want that is because you don't want to close your purchase and then move in and find you've got to dump in 5 or 10 or 20 or 50 grand more into this house because of a problem you didn't see. Recent examples that we've seen in our office from stuff that has popped up from inspections, sagging foundations, leaks in the basement. They have these thermal zapper, that is not a technical term, flash, not a technical term right here. Thermal zapper machines where they can see if there's any heat loss in the walls or if there's any cracks and cold air coming in. Windows cracked and you just can't see it. What else? Vermiculite, maybe some asbestos in the insulation or flooring. You know, a lot of older homes have this kind of stuff in the house, maybe knob and tube. that opens up a whole bunch of different problems when it comes to insurance coverage. So moral of the story is hire an inspector. It's worth the $400. I kind of went on a rant there. The steps are financing condition and inspection condition. Make sure you have enough time there to do what you need to do. Then at the time where you get the green light from your broker or banker and a home inspector to say this is a great property and you're great to move forward, you then waive your conditions and now you're in firm on that property. And then we've got to get your, sorry, I did a little bit of a dance there. We've got to get your file instructed to the law office, and then your lawyer will reach out to you and tell you what else you need to close that purchase. Could be 30 days, could be 60 days. Whatever you agree with the seller about. So, frequently asked question number 3. So, frequently asked question number 3 would be, what are the other costs associated with buying our home? So, we've already talked about the deposit, and that gets allocated towards your down payment and your closing costs. But what are some of those other closing costs? Well, you've got land transfer tax. If this is your first home, but the property exceeds a certain amount, you're only eligible for a $4,000 land transfer tax credit in this area, and you might exceed that. So there might be some land transfer tax that you have to have allocated for closing. And land transfer tax is a tax that is charged by the government for new homeowners for registering title and changing ownership of title. It's just to get more money. Let's be honest, it's a tax. It is what it is. Lawyer fees. So lawyer fees to close a purchase could range from anywhere between $1,500 to $1,800 to maybe $2,500. It really depends on the law firm that you use, the level of service you're getting, maybe how fancy the wallpaper is, how cushy the couches are, but also, the firm and the pricing dictating by the firm. Cheapest is not always best. And most expensive is not always best. You should reach out to your realtor or your mortgage broker or banker to ask about recommendations for a law firm that's going to be able to work with you to close your purchase. So again, legal fees, we always say around $1,800 on a purchase. It could be as high as $2,500. That might be super high, but in some areas that might be common. So lawyer fees. So land transfer tax, lawyer fees. Question I always get is about realtor fees. How much do I have to pay my realtor to buy a property? Well, you don't have to pay your realtor in general to buy a property. The only time you're going to pay your realtor to help you buy a property is if it's a private sale or for sale by owner, where the the person who's owning the home and wants to sell it is not paying a real estate commission for a person selling their home. So they're going to look for, your realtor might look for a fee to collect from either them or you, but that would all be disclosed up front with your realtor. So again, the realtor fees are non-existent on the buy side, generally speaking. Again, talk to your licensed realtor about that and getting some more guidance. So we have land transfer tax, we have lawyer fees, broker fees. A common question I have is, how much are broker fees? Well, generally speaking, mortgage brokers don't charge a fee. What it does depend on is the type of lender that you're placed with and the type of credit situation that you're in. So typical mortgages that we run out of our office here at the Rob Campbell Mortgage Team are what's called prime mortgages, or on the A side of lending. So big banks, credit unions, broker lenders, basically great credit, provable income. We get paid by the lender, so we don't charge you a fee. The time that a broker would charge you for a fee is alternative lending or private lending. Please note that any mortgage broker in the province of Ontario cannot charge you a broker fee in advance of that mortgage funding unless the mortgage is over $400,000. So I want to make this very clear. If you are sitting with a mortgage broker and they're charging you a retainer fee or a fee up front to sit and advise on a mortgage, it is actually illegal for them to charge you a fee in advance of that mortgage closing unless the mortgage is $400,000 or more, okay? In our office, we've never charged a fee in advance on any mortgage before it funds. And if your mortgage broker is going to charge you a fee for the mortgage, you should know well in advance. It has to be disclosed on the disclosure to borrower form. Here in Ontario, there's a section on the first page of that disclosure to borrower form that's going to list out all the fees associated with the mortgage and the transaction, and that broker fee has to be in there by law, okay, before closing. So we've talked about land transfer tax, we talked about legal fees, we talked about realtor fees, we talked about broker fees. And there's obviously some other discrepancy fees in there, like your inspection. If you're paying for an inspector, it's going to be about $400. There might be an appraisal fee. Appraisals, depending on city and location and type of property, those could run anywhere from $300 to $500 or more. Generally around the $350 to $400 range for a typical cookie cutter detached home in a city. If you get out into rural locations, or if you get into bigger homes with bigger square footage, that price can go up. So those are some of the fees associated with buying a home. Question number 4 I get is, Rob, we want to buy a home, we want to buy our first home, but we feel like there's a real estate bubble. Are we in a bubble? I'm going to tell you my uneducated assessment on where we're at. I don't think that we are in a bubble. Here's what I know. There's not enough detached, semi-detached, or townhomes available for buyers like you. And typically speaking, there are a lot of condos for sale or maybe vacant, speculative buying in Toronto. But that's a whole different beast. That's not the market that we're playing in. There's estimated to be about 1 million immigrants coming to Canada, 1 million new Canadians coming to this country over the next 3 years. And the lion's share of those are going to end up in Toronto. And when those people end up in Toronto, they're going to want to live somewhere. And there's just not enough availability of homes. Home ownership is not just a Canadian dream, but it's an immigrant's dream of owning your little piece of the puzzle here in Canada and raising a family and giving them something to pass on to. So I don't think that we're in a bubble. We might see a correction in housing values slightly, but will it be, $500,000 home correcting down to a $200,000 home? The only chance of that happening is if rates skyrocket or there's a surplus in inventory on the market because of defaults. I know that mortgages are underwritten very extensively here in Ontario and in Canada. So the chance of a housing correction like what happened in the States is actually quite slim. But that's my assessment in a nutshell. I don't think values are going to go down. I think right now values are going to skyrocket like they were in 2017. That's my opinion. Take it for what it's worth. Again, I'm not a financial guru or a financial planner, so don't take my advice as gospel, but I just don't think that we are in a bubble. I think we're going to see steady home value growth moving forward. Frequently asked question number 5 is, Rob, what's the difference between you and just going to my bank? Well, let me be blunt and let me be honest. You already have a relationship with your bank. If you have your savings account with them, your checkings account with them, your RSPs with them, your car loan with them, and your mortgage with them, or if you're a first-time buyer, you don't have your mortgage with them yet, you know what? Stick with them. They're probably going to give you a phenomenal deal if you push hard enough for it. What I say about mortgage broker lending versus bank lending is this. If you go to your local farmer's market, you wake up in the morning on Saturday and you're like, you know what? I got to get some fresh fruit. And you go to your local market and you go to the apple stand. And there's an apple farmer there, and she's owned her apple farm. It's been in the family for years, and she's owned her apple farm for years. And they have a great product, crispy, juicy apples. But you entered the market that day thinking, I just want fruit. I don't even know if I want apples. When you go up to that bench and ask them, who's got the best fruit for me to buy here today? Chances are they're probably going to tell you, we do. We've got the best fruit here. You need to buy our apples. If you're shopping for financing, we won't get into the ins and outs of product differentiation or pricing or penalty calculations coming out of mortgages. But at the end of the day, if you want to shop the market for better terms and conditions, better rates or fees, we're open to have that conversation. I want to be very clear, not all banks are bad. We need banks in Canada. We need the big 6 in Canada because there is a good source of funds there that help fund broker lenders as well. But if you've got all of your assets and liabilities with one institution and you know them and they know you and you have online access to them and it's just easy and it's the path of least resistance, stick it out. Stick it out. It might be a good option for you to stick it out. However, there will come a day, mark my words, there will come a day when you're going to be dissatisfied with your institution. And this isn't a dig at the banks. It happens at broker lenders too. I get people calling me up all the time going, I'm with this lender. I don't want to be with them anymore. I want to get out. Life happens. Credit happens. Sometimes we miss payments. Sometimes our credit scores dip down and we're no longer appealing to our current institution, or they're not willing to give you the same kind of perks as a new business would. So going elsewhere might be advantageous to you. Super big word, advantageous. Who even knew I knew that word? I just picked that right out of my pocket. I don't even have a pocket. So anyway, moral of the story is it's always great to shop your options. Just be cautious with shopping too many options because, if you're dinging your credit bureau at every financial institution, that could impact your credit score and your shopping ability. Mortgage brokers only pull your credit once, and we can shop that out to multiple different lenders if we need to with that one credit bureau. Okay, so there's my 5 frequently asked questions for this spring market before things blow up. I'm Rob Campbell. I'm from the Rob Campbell Mortgage Team. I should do it like this because that didn't work. Let's try this. There we go. That's way better. Please leave a comment below if you have any feedback about this video, if you liked it, if you hated it. Comments below. Give me a thumbs up on this video to help me reach more people. And don't forget to like and subscribe. We got a like and subscribe button here on the channel somewhere. And if you're watching this on socials, please follow me and share this to anybody who you think this might be useful to. Anyway, I'm Rob Campbell. I'm a mortgage broker, and I'm out of here.
Explode.